Hello, everyone, and thank you for joining today's webinar, Canadian Automotive Market Update. What's going on out there? My name is Maisa, B2B Marketing Manager at AutoTrader.ca, and I will be the moderator of today's webinar airing. We have a few housekeeping notes to address before we begin. To ensure you can hear the audio transmission, please enable computer audio through the prompt in the GoToWebinar platform and turn up your computer speakers or plug in your headphones. As we progress through the webinar, please leave any questions you may have in the question box on the right-hand side of your screen. We will address questions just prior to the closing of today's webinar. Now, I'd like to introduce to you our speaker, Barish, Vice President of Insights and Intelligence at AutoTrader. You may recognize Barish from his regular appearances in Canadian media outlets, including Global News, CTV, and the Globe and Mail, where he shares some of the Canadian car shopper data and research you'll hear about today. Barish has over 10 years of experience in the Canadian automotive industry, analyzing insights and trends shaping the automotive sector to help you make more informed decisions. Barish, thank you for joining us today.
All right. Thank you, Maisa. All right. What a day to be running this webinar today. After the news yesterday, there's a lot going on, obviously, but we'll see. We'll talk about it, and we'll see what's going on and what we expect to see, and go from there. So, high level, here's the agenda. As usual, there's no, if you remember, if you joined the one that we did at the end of last year, the framework is pretty much similar to that. I'll kick it off with the overall macro environment, what's happening in the economy as far as we know. We'll jump right into new vehicle sales and forecasts, what we expect to see. Same for the used car market. We'll look at some inventory figures and what's happening with new and used inventory, and jump right into pricing. Prices, monthly payments, loan terms, affordability. We'll talk about that, and we'll try to summarize it. All right, starting off the economy as a whole. I think if you look at the metrics as they are, there are no major changes from the last time we talked about this. Overall, GDP growth is good. Wages are growing. Saving rates, household savings rate is pretty positive still compared to pre-COVID. Inflation has come down, and it's within the 1 to 3% budget target. So that's good, although it ticked up slightly last month. Interest rates, as we all know, they've come down from their highs. They're looking much better than they used to be. But that said, there's still a couple of things that are red, so to speak. Obviously, the interest rates for automotives, they're still on the higher side, especially when we compare that to pre-COVID levels. And car prices, although they have been coming down, they're still on the higher side. But we'll dig into these in more detail. But starting off with the new vehicle sales and forecast. So this data is from our friends from the Rosier. The year started off okay. The January was pretty strong. February was, although if you look at the year-over-year, the year-over-year change, it's negative. There's some, in terms of the total number of selling days, we had one less selling day this February compared to last year. And also, even if you look at the graph here, you'll see that the February 2024 was very strong. So we are overlapping a relatively strong month. So when we did when I calculated the SAR for the year, we are now sitting around 1.9 million cars to be sold. And again, this assumes that we'll discuss it in the next few slides. This assumes that there's no tariffs. And obviously, there's some news around that as well. So far, things are looking okay. The trajectory is good, assuming no big changes. So yeah, again, just to remind, this is a no tariff scenario at this point. Again, I don't think anyone knows what's going to happen on April 2nd. Hopefully, apparently, so there was this announcement, obviously by Trump and his administration. And I just literally 15 minutes ago, I just read that there was a conversation between Ford and Senator Ludwig last night. So hopefully there's going to be some good news coming out. But as it is, assuming that there are no scenarios, we expect to see further growth in the market. And now by the end of 2025 and beginning of 2026, we should go back to pre-COVID levels. That said, obviously, there's an elephant in the room, right? So we haven't really done a forecast, a scenario analysis per se, but I've read a couple of third-party reports. Obviously, if these tariffs go through, there will be some impact to these figures, especially if they're implemented long-term. Short-term, right? What we've heard from OEMs and our connections in the industry is that if these are short-term, these tariffs are short-term, no big impact on production levels. But on the other hand, if they are long-term, definitely there's going to be some impact. How much is it going to be? What percent? We'll find out. Obviously, we are keeping an eye on it. But again, on the other hand, we still have 6 days. I think 6 days more to go for these tariffs to become official, if they'll ever become official, and then we go from there. So as it is, we see the new car market strong. Assuming no big macro changes, things are looking okay. What's happening in the used car market? So story is a bit more complicated for used. So we started off the year pretty well, just like the new car sales. It was up by 5.1% on a year-over-year basis when we look at the total used funded transactions from DealerTrack. February was flat, down by 0.5%. There are a couple of reasons. The obvious one, again, the tariff conversations, I think they became more serious in February. And also we had this big major snowstorms in Ontario and Quebec, which impacted the performance. So it was up and down. It fluctuated a little bit, but we ended up with 0.5% year-over-year down. So, but what's happening in March so far is very interesting. So March has been very strong. We are seeing quite a bit of an uptick in used car activity in March so far. So I'm not only talking about the sales figures, but when we look at third-party data, there's quite a bit of an uptick in used car sales through Google. When we look at leads per inventory, removing price drops and looking at PV used leads, there's quite a bit of an uptick in leads per inventory. Our organic traffic has been skyrocketing in the last while. And this is what we had expected. So I've talked about this in different forums through the media about this. So going back to COVID, if you remember, during COVID, especially in the beginning, because of all these microchip shortages and supply chain disruptions and whatnot, the demand, substantial volume of demand shifted from new cars to used cars. And used car prices had gone up in 2021, and during the year, the increase was 21.7%. So what we did was, when these conversations started to become a bit more serious, beginning of February, we ran this survey on the site, and we asked consumers whether they would whether the tariffs would have make an impact on their vehicle purchase decisions. That 47% of them said that it would, and within that 47%, 30% said that instead of buying a new car, they would be buying a used car. So looking at the, again, I'm just going to repeat myself, but looking at the March data, that's exactly what's happening. There's quite a bit of an uptick in demand, in leads, in organic traffic, and used car searches. So far, what we expected to see is what we are seeing in the market. One thing that to note here is that if you look at the sales by type of consumers, subprime consumers seem to be struggling. If you look at the bottom right corner of the screen, subprime is down, but prime is doing so far pretty well since the beginning of the year. So again, no tariff scenario. We expect to see a bit of an uptick, and if these tariffs are implemented, and if they're short term, probably there's an upside to this forecast. But right now, this is how we see it. I tend to update this forecast every quarter, depending on what's happening in the market. So based on how these tariff conversations go, how consumers react, we will make some changes to it. But right now, this is our view. When we put everything together, new and used, the overall market is expected to be positive in the next few years. All right, so inventory. No big changes on since the last time we talked when it comes to new car inventory. New car inventory is pretty good. Even when we look at it compared to 2019 levels, it's up by 1.5%, almost 6% on a year-over-year basis. When we segment the data by where the cars were manufactured, Asian brands are still quite behind. One, demand is high on these vehicles because they tend to be more affordable compared to European, especially to European OEMs. European brands are doing pretty well. Again, no big changes. Obviously, there's quite a bit of decline in their demand, especially in Asia, and we are hearing that these vehicles are being allocated to the rest of the world, and therefore there's a little bit of an uptick when it comes to inventory per dealer. That's the table on the bottom. And domestic brands, yes, they're down a bit, but healthy. So no big changes here. But on the other hand, when we look at the used car market, the situation is a bit different. So there's quite a few things to unpack here. So used car inventory is at around 2023 levels. They're compared to last few years, they're a bit on the lower side, 16.4% year-over-year down and 16.8% down compared to 2019. So there are multiple reasons. Number one is, again, going back to COVID, as I talked to you guys about it in the last couple of slides, we estimated that 1.5 million fewer cars were sold between 2020 and 2023. So these cars obviously never coming back to the market. And now, if you look at this graph, right, it started in around here, right around 4 years after COVID started. So this is partly because of the impact of less lease returns, and you know, some consumers decided to keep their cars for longer. So therefore, we are seeing some decrease in used inventory levels. That's number one. Number two, I believe we talked about this in the last webinar as well, but there's a correlation between the strength of the Canadian dollar against the American dollar. And whenever the Canadian dollar is weak, we tend to export quite a few cars down to the US. And as we probably all know, Canadian dollar is at its lowest levels in a while. So although I do not have the data, what we hear in the market is that there's quite a few cars that are going down south because of the impact of the exchange rate. So yeah, so we expect to see that there's going to be obviously some fluctuation in this data, but we expect to see that the The used car inventory is going to be constrained for the next couple of years until we get out of this COVID crunch, and hopefully, again, tying this to what we are expecting to see through tariffs. Again, hopefully they're either no tariffs or they're short term, so we won't feel the impact. But again, if they tend to be on the longer term, then probably used car used car inventory is going to be constrained for a while. Let's jump right into days supply. Again, these are based on the inventory that we've got and based on the sales performance that we see on the site. So new car is now we are sitting at 71. Not too bad. They're pretty healthy. They're lower than the last few years maybe, but they're still pretty healthy. The industry healthy rate is believed to be around 60, so we're above that, which is fine. The story is obviously if you look at the bottom graph, the story is a bit different and aligns with what we just talked about. There's just used cars day supply is not as strong as it used to be in the last couple of years. So that's the situation. And again, depending on how things go with tariffs, we might see further impact on the used car day supply. If the demand keeps going the way it is, probably this metric will keep going down. That said, one silver lining in this whole tariff situation is that if these tariffs go through, hopefully we'll see some relief in terms of the cars that are exported to the US. We'll see fewer of them or none, hopefully, and therefore that's going to help with the overall used car inventory availability. But looking at the new vehicle days of supply by brand, I'm just going to pause here. I'm sure there's some of you guys are interested in your own brands, but what I'm going to tell you is that this story, again, compared to based on what we talked about last time around, there's no big changes. There's the luxury brands and domestic brands tend to be on the right side of the graph, which means that they have higher inventory availability. And if you look at the left side of the graph, you'll see that it's mostly mainstream brands. There's the production levels for these brands, especially the Asian brands, they are not back to pre-COVID levels. And B, as we talked about, there's quite a bit of demand on these vehicles. All right, EVs. So no big changes again. New inventory, new BEV inventory is increasing. Again, we still have these mandates. They're up by 26.2%. We'll see if they'll stick. There's some expectations that there will be a change in the political landscape. If that happens, probably likelihood of these mandates being ditched is higher, but we'll see. On the used side, it's pretty much at the same levels as last year. No big changes on that front as well. But one thing that I'd like to add here is that, I've been talking about this EV research that we do. We've been doing this for 4 years now. And one of the key questions that we ask consumers is that whether they would consider buying an EV as their next purchase. And it was 68% in 2022, 56% in 2023, 46% in 2024. And we're just about to finalize the 2025 research, and I cannot share the exact figure just yet. We haven't finalized it, but the decline continues. So it's going to come out in the next couple of weeks, and I'm sure our B2B marketing team is going to reach out with that. So if you're interested in understanding the EV market in more detail, where we ask consumers a lot of questions about their motivations, why would they buy one, why wouldn't they buy one, what do they think about EV mandates, and we asked them a lot of questions. It's a very comprehensive report, and we would be more than happy to walk you through it in detail. I've shared this last time around as well, but this data is actually from the graph on the bottom is from Q4 of 2024. As we talked about, there was quite a bit of an uptick in EV sales in Quebec because at the time they were making some changes to their provincial incentive program. $7,000 would become $4,000 beginning of this year. So a lot of people rushed to take advantage of this this generous provincial rebate program. And in 2024 Q4, if you look at sales figures, BEV sales were up by 124.5% on a year-over-year basis. So that's quite a bit of an uptick. And what we did was when we removed Quebec from the equation, actually EV sales in Q4 showed a slight decline. So whatever we are hearing about this strong EV sales growth was driven by Quebec last year. So what's going to happen this year? I know that there's the federal incentive program has been paused since January 13th. So what's going to happen to that? Again, I think it ties back to the elections that's happening at the end of next month. Depending on who gets elected, probably we'll see a decision that aligns with their political views. But one thing that I want to say is that when this happened in Germany back in December of 2023, they suspended their incentive program, and in the following year, they saw a decline between January and August on a year-to-date, year-over-year basis. They saw a decline of 68.8% on a year-over-year basis. I understand it's different markets, different economies, and I'm not suggesting that it's going to be exactly like that, but probably assuming that there are no changes in these incentive programs, EV sales might struggle in 2025. All right, price index. Let's talk about prices again. Just as a reminder, these are listing prices. They are not transactional prices. These are as dealerships listed their cars. We do some normalization, we do some calculations, we remove some of the outliers, but these are listing prices, not transactional prices. So looking at the new car prices, they're down by 3.3%, just below 65 grand. And when we look at used car prices, they are down by 4.5%. So a couple of things to update here. So I'm just, we are going to be publishing our quarterly price index report at the end of next month, but I can give you a couple of high-level tidbits as to what we are seeing so far. So now going back to what we talked about around the demand shifting from new to used and the used car supply being on the constrained side mostly because of the COVID era challenges. Probably that's the best way of describing it. So the demand is high, the supply is constrained, and what happens to prices? Prices tend to go up. And that's exactly what we are seeing in March. So if you look at a normal year, I don't think we've had a normal year in the last few years, but if you look at 2019 on the graph in the bottom, usually that's the trend. Prices start on the higher side and then they come down throughout the year. And that was the case up until this month. And in March so far, again, we still have a few more days to go, but we are seeing a bit of an uptick in used car prices that aligns with the increase in demand. And also when we looked at price drops, when we look at the listings that received at least one price drop, they are down by almost 30% on a year-over-year basis, meaning that 30% fewer listings experienced a price drop this year, again, due to what we've just described about the supply and demand mismatch. One other thing that I get a lot of questions about, I don't think the next slide was here, but the EV prices. So we put together a view on what's happening with EV prices. So just as a reminder, there's no new EVs on AutoTrader. No new Teslas on AutoTrader.ca. So they're down by 5.7% on a year-over-year basis. They're sitting around just over $70,000. When we look at used EV prices, they have come down by quite a bit. So they are down by 16.3% on a year-over-year basis. Again, we can talk about it in more detail when the EV research comes out, but there's the consumers' concerns are, generally speaking, they didn't change much in the last couple of years. Range anxiety is number one. Lack of infrastructure is the second one, and EVs, both for new and used, they tend to be more expensive than their ICE counterparts, right? And on the used EV side, what we are hearing from consumers is that they're concerned about battery health, battery replacement costs, and all that stuff. So we believe that these are the main high-level reasons as to what's happening with the EV prices. All right. Yeah, so again, prices, looking at prices by luxury versus mainstream. Luxury prices are down by 6.2% and mainstream is down by 1.9%. Annually, they were both down in double digits. And when we look at the market as a whole, decline was around 12.1% for the entire year 2024. And this was the largest annual price decline we've ever observed since we started collecting and analyzing the data. So as again, things were normalizing, prices were coming down, and interest rates are coming down. We were just very close to normalcy, but now we have to deal with this, with these tariffs, and see how that's gonna have an impact on the market. Affordability, yeah, it's coming down, which is good for consumers, but still higher compared to where they used to be. 45 days for 45 weeks used to be before COVID. Now we're sitting around 51, 24 weeks for used, and now we're sitting at 27. But if you look at the trends, they're both coming down. Again, with tariffs and the demand shifting from new to used, these figures might change down the line. Interest rates, used car interest rates are down from their peak by around 1%. That aligns with the decline in Bank of Canada interest rates. And this data is actually from transactional data from DealerTrack at the aggregate level. And same goes for this one, 1.8% decline for new cars. And if you look at subvented versus non-subvented, if you look at the graphs on the bottom, they're both down by quite a bit. So again, things are normalizing, but again, we'll see what happens with these tariffs. When we look at the monthly used car payments, they're up by quite a bit. They're still high, especially compared to pre-COVID. $466 was $66. Now we're looking at almost $620, which is over 32% increase. And when we look at used car loan terms on average, they also came up. So car prices are higher, and how do consumers afford these vehicles? They extend their loan terms and they pay more for them. Same goes for new, up by 49% compared to 2019. Now we're just sitting below $1,000 at $964, and the loan terms are also up slightly compared to what it was during COVID. So we have one more minute to go. I wanted to take a couple of questions, but so if we wanted to summarize what's happening right now, again, no tariff scenario. Things are going well. Supply and demand is good for new. There's cars out there. They're selling. Pricing tend to be on the higher side, but the interest rates are coming down, so that's good. But when we look at used, again, the demand, no concern so far. Pricing was good. It had been coming down, but the supply is a bit constrained. So again, depending on what happens with the demand, with regards to tariffs, and all that. Probably we'll see further developments on the used side, but right now, as it is, that's what we how we look at the market and how we see the market. With that, with exactly 1 more minute to go, I just wanted to see if there are any questions from the crowd.
Thank you for sharing all these important details with us today, Barish. We have some time for a few questions. The first question from the audience is, there's a lot of chatter in the media about more Teslas being sold. Do you see more Teslas being sold in the market? If so, what's going on?
Yeah, no, good question. And I hope this doesn't sound arrogant, but I've done, I don't know, maybe more than 15 media interviews on this. Everybody wants to know about what's happening with Tesla. So here's what we see on AutoTrader.ca. There are more Teslas for sale. So looking at the data from last week, I'm just trying to remember the exact percentages, but on the used side, there are 26% more Teslas we have on the site. I think just around 2,500 Teslas, and it's increased quite a bit in the last couple of weeks. So I don't know if they're selling just yet, because the increase in inventory started relatively recently. But what we did was we looked at prices for Teslas, and they're actually coming down at a faster rate compared to the rest of the BEVs that we have in the market. As we've discussed, they're down by 16.3%, the overall BEV market. But when we look at Teslas, they were down by, I believe, 21.9%, 22% almost. So, but that said, when we looked at the data, the pricing data going back a couple of years, this dynamic has been there, meaning that the year-over-year decline has been in double digits. So we don't see the impact on pricing as much just yet, but there's more and more Teslas that are being sold on the market. So if you're evaluating to acquire a Tesla, think twice.
Okay, the next question is, you said you are seeing an uptick in used car demand in March. If tariffs don't go through, what do you expect to see with the average price of used vehicles?
Oh, good question. I don't really have a forecast or scenario for this, but what we expect to see is that the market would go back to where we left at the end of last year, meaning that the used car market in the last quarter of the last year was very strong. I think it was up by 5.3% for the quarter on a year-over-year basis. So we expect to see that the demand would go back and normalize at this point. As I talked about, the March has been pretty hot so far. So probably would slow down, and some of that demand would probably shift back to new. But in terms of pricing, probably we would go back to the normal. You know how I said prices start on the higher side in the beginning of the year and they come down. Probably we would go back to that trend. But in terms of what would happen in exact figures, I don't really have a forecast, and I don't want to speculate.
Okay, the next question is, do you have any used vehicle pricing insights that you can share with us more regularly?
More regularly. We have the quarterly price index report that, as I said, I'm going to be writing next week. And our goal is to publish that by mid to end of April. We usually, I usually do it within the same month after the quarter ends. That's our goal. But on the other hand, I tend to share there's a lot of interest from the media about car prices, especially nowadays, whatever's going on. So I tend to share these with the media as well, and also our B2B team publishes them on LinkedIn and other channels. So follow them, and then I'm sure you'll catch a glimpse of what's going on.
Okay, the next question. Will AutoTrader be hosting these webinars regularly?
Yes, so this is a quarterly webinar. I think we got the same question last time around as well, which is good. Seems to be the content seems to be resonating with the audience, so we are planning to do it on a quarterly basis. And again, if you follow Trader Corporation on LinkedIn, and you will receive a notification when we are running these. And as long as there's interest, we'll keep doing them.
Will a recording of the webinar be made available to attendees?
Maisa, I'm gonna ask that question to you. Is it gonna be available?
Yes, we will be sending it to you after this after the webinar finishes.
Okay.
Okay, so that's all the time we have for today's airing. If you've asked a question that we didn't have time to cover, we will touch base with you very promptly through email. Thank you everyone who has taken the time out of their busy schedules to join us for today's webinar. As mentioned, we will be sending each of you a recording of the webinar. To stay apprised of the data and trends shaping the Canadian automotive landscape, visit and bookmark go.trader.ca/newsroom or follow AutoTrader.ca on LinkedIn. We hope you will join us in the next episode of Canadian Automotive Market Update. What's going on out there? Thanks, everyone.
Thank you.